Welcome to Ainsley News, 23rd of June. It's a Tuesday. Fun one today. Gold and the Nike Swoosh. Gold hit an 8-year high last night, reaching US $1,765. $1,765 for gold. Our AUD surged over 69 cents to take all the shine off the rise for our local investors. Much of gold's rise was likely off the back of a worsening global outlook for COVID-19. Whilst mainstream news seemed to have largely moved on with more stories of car crashes and puppies, the global reality is getting worse. Notably, with Sunday seeing the single worst day globally for new cases of COVID since the pandemic began at 162,045 infections. From WHO's Director General Tedros Adhanom Ghebreyesus, the pandemic is still accelerating. We know that the pandemic is much more than a health crisis. It is an economic crisis, a social crisis, and in many countries, a political crisis. Its effects will be felt for decades to come. And so whilst markets continue to flourish on hopes of the mythical V-shaped recovery, the second wave threatens a U-shape at best, or W-shape more likely. This from Bloomberg. The fight is nowhere near close to being over, said Tuli McCulley, the Singapore-based head of Asia-Pacific Economics at Scotiabank. A second significant wave of infections in advanced economies is a huge risk for the global economy, and that is still very early stages of recovery. One thing to consider when talking of the V, or U or W-shaped recovery for that matter, is the critical piece of where the left-hand side started and when the right-hand side ends up on the graph. It is well documented that Australia was already languishing economically before COVID-19 broke out. We did not go into this in a strong position, which might carry momentum into a strong recovery to get that right-hand top of the V equal to the left. Rebounds in retail spending, while certainly strong, may well contain a large degree of pent-up demand that may not see that replicated going forward. Some elements of retail, such as clothing and restaurants, are still down 20 to 30% from last year. This all before the economic cliff in September. The key thing to consider too is that the broader retail numbers that saw a 16.3% surge in May were after a 17.7% fall in April. That's just retail. Consumer services have been a lot harder hit and are yet to see the recovery. And so more broadly, we need to consider that if we recover to what might broadly look like a full recovery of, say, 90%, we were not in an economy where many businesses could handle even a 10% drop. We then look at the insolvency phase to this crisis. This next chart from AMP this week shows just how far we are away from it. This chart here showing the Australian-US economic activity trackers. How connected to the US we are there. More and more commentators are talking about a Nike swoosh recovery. The issue will be when the right-hand side ends higher than the left and how many businesses become insolvent beforehand. If you haven't seen it, I'm sure you have. Here's the Nike swoosh, and it's kind of relative to current trend in graph movement. Victoria is demonstrating right now that we are far from out of the COVID woodwork, and we are most certainly economically inextricably connected to the rest of the world, which still has a long way to go. Since this all started to seep back into the subconscious of more grounded investors on Friday, we have seen yet again how gold's role plays out. Check out this next graph in comparison showing gold, the Dow, and its total disconnection since the 19th of June 2020. And that's Ainsley News for today. Jump into our website, ainsleyBullion.com.au for other pieces of news, purchase in gold and silver, or jump over to ainsleywealth.com.au for all things crypto. We'll catch you tomorrow for more news.